Hello and welcome to Vested Interest. I'm Shane Green. I'll be your host. If you're new to the channel, just to catch you up, on this channel we will be covering dividend growth investing. More specifically, we will be covering the creation, monitoring, and updates to the dividend growth portfolio I've set up. We've already covered the creation and we'll cover the additions as we go along. If you want to check out how we got started, please check out some of my previous videos. This portfolio will be focused on dividend growth stocks. The goal is to one day live off the portfolio's passive incomes provided by the dividends and utilize that income stream to make other investments. At a minimum, I will be adding to the portfolio on a bi-weekly basis on or around each pay period. If at any time you find the content interesting or of value, please hit the like or thumbs up button, subscribe, and share the content so we can grow as a channel and community. Now don't forget to hit the notification bell so you can be notified when I add a new video. I welcome all questions, ideas for future topics, or constructive criticism in the comment section below, but please keep the comments respectful and in line with YouTube's posting guidelines. Now, some other metrics that are important to me are PE ratio, price to earnings ratio, free cash flow, which is what is used to pay the dividends and reinvest in the company's growth, the dividend growth rate, so how much they raise the dividends, and how many years they have raised the dividends. Price to book ratio, which covers assets minus liabilities, ideally with a 1 or under. PEG ratio, which is price to earnings, adding in earnings growth, with ideally a PEG less than 1. Both of those, PB ratio and PEG ratio, less than 1 is not necessarily the standard. I'd also look at other companies comparable to the company you're thinking about buying. What are their price to book ratios? What are their PEG ratios? And if they're lower than other comparable companies, you're probably on a good track. Now, there are more metrics to use if you so choose. There's no one way to value stocks, so I suggest everyone come up with their own metric and invest according to their strategy. Every investor is different with differing levels of risk tolerance, timelines, and goals to consider. Do not blindly copy mine or anyone else's strategy, and always do your own research. Now, let's get to the additions of the portfolio from this past Thursday, October 21st. So as you can see here on October 21st, 2021, the total amount invested was $5,033.79. We picked up 6 shares of Huntington Bank, ticker HBAN. I don't know why sometimes it breaks up the purchases into 2 different purchases, but you can see 3 shares at $16.62, followed up immediately by 3 shares of $16.62, which tells me that it was purchased in 6 shares total, just split up into 2 purchases. Coca-Cola Company, ticker KO, 4 shares at $54.35. 2 shares of CVS Health Corporation at $85.99, ticker CVS. That was one that I picked up originally when I set up the portfolio. I hadn't been adding to, so I picked up 2 more shares to make sure that I continue to add throughout the portfolio. Pfizer Inc., ticker PFE, 2 shares at $42.57. DT Energy, ticker DTE, 2 shares at $115.30 per share. IBM International Business, I'm sure everyone knows who IBM is, 4 shares at $132.11 per share, ticker IBM. Enterprise Products Partners, ticker EPD, I picked up 10 shares at $24.63 per share. Enbridge, ticker ENB, I picked up 8 shares total, but again it broke it out into 2 separate purchases, one for 6 shares, one for 2 shares, but $42.98 per share for all 8 shares. Picked up 4 shares of Bristol Myers Squibb. Again, broke it up into 2 purchases, but the 4 shares were $57.67 per share. Bristol Myers Squibb is one that I think currently is pretty well undervalued. Might be worth a look if you're looking to add something from the healthcare sector. Verizon Communications, ticker VZ. I picked up 6 shares at $53.53 per share. Rio Tinto is a mining stock. A lot of people don't really get into the mining stocks, but I like Rio Tinto. Another one I like is Sibanye-Stillwater, but I didn't make any purchases in that one. But Rio Tinto, 6 shares at $65.92. Again, this is another one I think is pretty well undervalued. might be worth a look if you're looking at adding anything from the mining sector or interested in that sector. 2 shares of Procter & Gamble, ticker PG. Those were $140.42 per share. 2 shares of 3M Company, ticker MMM. They were $181.66 per share. This is another company I think is pretty well undervalued. 3M is pretty well known. I use a lot of their products. You probably do too. Might be another one worth a look. This is out of the industrial sector. If you're interested in adding something from the industrial sector, or add to your watch list or something to do some more research on. Leggett & Platt, I've been adding to quite a bit here over the last few purchases. Ticker LEG, I picked up 6 more shares at $47.27 per share. Kraft Heinz Company, ticker KHC. I'm sure everyone's aware of their products, ketchups, A1 sauce, that sort of thing. Picked up 6 shares at $36.79 per share. 1 share of Johnson & Johnson, ticker JNJ, for $162.50 per share. LyondellBasell Industries, 4 more shares there. That's another one that I've added the last couple of times I've picked up additions to the portfolio. It was at $98.44 per share. And Prudential Financial, 4 shares there, and they are actually up from where I first bought them at $114.60 per share, but I still feel like they're fairly valued, and they pay a nice dividend. They're out of the financial sector. I'm thinking about doing another video kind of going over the different sectors and the stocks that I have purchased, and maybe some on my watch list from the different sectors, so you can understand what the different companies in the different sectors are about, or you can do your own research on that. And I know the amount invested this time, $5,033.79, is a pretty significant amount, and more than what I usually invest in my regular paycheck. That's because I just started a new job. So, and when I started, they gave me a bonus. So I took that money, rolled it in with the regular pay that I get, and invested more into the portfolio this time around, which allowed me to pick up quite a bit more than I normally pick up, but still spread it out and utilize the dollar cost averaging strategy that I like to utilize and continue to add to my different positions, whether they're up, down, sideways. Again, the focus of this portfolio is the dividend returns, and all these different companies are picked up for that reason, some of them paying higher dividends than others, but that's the idea. Now, in this slide, we're going to look at a quick portfolio update. The total portfolio after the $5,033 investment added to it is $54,792.25. The dividend yield is 4.106, and the annual dividend income is now sitting at $2,250. Nice round number. Probably couldn't do that again if I tried, but $2,250 per year. Again, if I stopped investing in the portfolio right now, I'd still get that annual income every year, so long as the companies that I've got in the portfolio continue to pay dividends, which most, if not all of them, are pretty safe and secure. I don't see them cutting any dividends anytime soon. Their free cash flow covers the dividends quite well, and they're all pretty stable or growing companies. Now, also on this slide, touched on it briefly on the previous slide, but sector weights. So these are the different sectors: communication, consumer discretionary, consumer staples. Some people break consumer discretionary and consumer staples into further sections. Energy is another one you could break up: financials, healthcare, industrials, technology, materials, utilities, and REITs and real estate. And then some people like ETFs. I personally don't have any ETFs in this portfolio. I may add something in the future, but really, in my opinion, if you want to invest in ETFs, you could create your own, not pay any of the fees associated with it. Look at an ETF you're interested in, see what they're invested in, see how they have it broken out, and you can buy those same stocks yourself in your own portfolio, and you can watch those ETFs and how they differentiate their allocations over time and adjust how they want to or how you want to going forward. But again, ETFs are not something in this portfolio, but I do have a tab here for them in my tracking spreadsheet if I ever add them. So currently, I'm sitting at 6.53% of the portfolio in communications, 2.97% in consumer discretionary. That's gone up a little bit from the last time. It's reaching 3%, and I'd really like to get it closer to 5%, but that's partly from the purchases of the Leggett and Platt that I've got, that I've added the last couple of purchases. Consumer staples at 14.36%, energies at 11.5%, financials at 7.99%, healthcare at 12.34%, industrials at 13.88%, technology sitting at 7.76%. I'd like to get that one up a little bit more. I may add some more to IBM. I've got some Cisco in my portfolio. Intel is another one in my portfolio that I might add some more to. Materials sitting at 4.69%. That's where Rio would sit, the mining stock that I picked up in this purchase. Utilities sitting at 9.32%, and REITs and real estate sitting at 8.66%, and that's really just all REITs. I know it says REITs and real estate, but it's sitting all in REITs. So that's how the sector weights break out after the recent additions. And just a quick reminder, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor. If you found any value in this video, I'd like you to hit the like or thumbs up button for me, ring the notification bell, and subscribe to the channel. It helps me out, and it helps to grow the channel. It helps to with the algorithms to get more people to see the video whenever you hit the thumbs up button. So if you could do that at a minimum for me, it doesn't cost you anything, but it does help me out. As I mentioned, I'm not sure if I'm going to do another video this weekend. I've got to help move my wife's grandmother's stuff out of her place this weekend, so I'm not sure if I'm going to get to another video or not, but I'm debating on whether or not the next one is going to be in September whenever I do my first purchase. If it is in September when I do my first purchase, it'll also include the dividends paid to date update. So I'll go through all the dividends on a calendar like I did on the previous video, and I'll go day by day of all the dividends that were paid, who paid them, how much was paid, and then we'll tally it all up and look at the totals for the month along with the totals from previous months, and we'll look at how much was paid to date, and that will give you an idea what the portfolio's whole objective is, those dividends and the return from those dividends. So again, I never have to sell. That's why I like dividends, to be honest with you. I never have to sell a stock. I'll get a return on my money, keeping the stock for years and years, decades to come, so long as the company continues to pay out those dividends. Whereas in other stocks, whenever you purchase that don't pay dividends, whenever you purchase them, the only way you make money is you're hoping that they go up, and then you sell them, you get a one-time payment from that sale, you pay your capital gains tax, and that's your profit, and you walk away. But the stocks are gone. That's the difference between buying a stock that pays a dividend and a stock that does not pay a dividend. I'm not saying one's better than the other, or one's going to make you more money than the other. I just prefer dividend growth stocks because, like I said, I could hold the shares, never sell them, and still get a return on my investment. So let me know what you think in the comment section below. And do you invest in any of the companies that I invested in this time around? Do you invest in companies paying dividends? Do you have any of these companies in your portfolio currently? What are you adding, if anything? Are you stocking up on cash, waiting for a dip? You have some things on your watch list, you're waiting for them to get cheaper. What are you doing with your portfolio? And if you haven't taken the step and begun to invest in stocks or assets, I'd just like to encourage you to do so. With so many different platforms to choose from, investing is easier than ever and is one of the best ways to secure your financial future. I'll stop on back next time. Check out the channel. Like I said, it'll either be an update on what I'm adding for the first week of September, or it'll be a breakdown of the different sectors, one of those two. I hope you have a great Sunday. This is Shane signing out. And remember, if you want to secure your financial future, today is the day to take a vested interest. Take care, and we'll see you in the next one.